As this year comes to a close, it's time to take stock of what we've learned, where we've stretched and where we've shifted, and what lies ahead. From building a strong wealth mindset to digital threats, changes in the sustainability environment, estate planning, and post-retirement clarity, we've covered it all. Welcome to Everything Counts. In this bi-weekly podcast series, we are frank about money and the particular discussions we should all be having. How to save it, how to spend it, how to grow it, its pitfalls, and how to make it work for us. On Everything Counts, we'll share the information you need to get your financial ducks in a row. Hello, I'm Mateo Khwaripe, and in this episode of Everything Counts, we'll reflect on the year that was. Now, as we look back on this past year, we ask ourselves one key question. What does a wealth mindset really mean, and how can we shift our thinking to make sure that we're making better, more strategic decisions about our financial well-being? Itumeleng Merafe, head of Investec's private bank, joined me for this particular important conversation. We spoke about the habits that set successful people apart, from setting financial goals to building resilience, staying flexible, and investing in yourself. Itu gave us powerful insights into the minds of higher achievers, how to master the wealth mindset in a world of social comparison, and the difference between saving and investing. It's an episode that delivered on practical steps and mindset shifts that can help you take control of your future. So how does one define that mental wealth mindset?
Sure. For me, a wealth mindset is a few things. I think one is around long-term thinking. I think that we often get caught up in a world where we think, and you're comparing yourself to people, and often people say comparison is the greatest thief of joy, right? So it's easy to live in a world where you're looking at social media where people are photoshopping their lives and think that's reality. But you have to take a long-term view on things. I think that you have grit. You have to, and grit, as Angela Duckworth defines it in her book, is this notion of like having purpose-driven effort over long periods of time, even before you see results. And a lot of that is around believing in the thing that you're investing in is about investing in yourself, making yourself better at this thing day in and day out. It's about discipline and consistency. But one of the most important things I'd say about having a wealth mindset is about operating from a place of abundance. I think if everything you do is from a fear of scarcity, I think that can sometimes determine how you operate. I think if you understand that life isn't a zero-sum game, and wealth isn't about you win and I lose, but sometimes it's about making the pie bigger, I think it'll help you approach all of that with a very different sense. Now, I know all of this can sound like really philosophically pleasing, but the truth, and for many people, when you're facing struggles of feeding your family or getting things done, when I talk about grit, when I talk about long-term, it's about going, I may be at a place right now where I need to do what I need to do to get by, and having the perseverance to work through that, but understanding and having the hope that tomorrow will be better.
Then looking at your community as you build on this mentality, right? You might find you are a young career guy, you're doing well, you've just started. The friends are getting the cars they've always wanted. You trying to have a slower gratification for your own lifestyle, maybe buy something that gets you to and from work. The importance of also having influence around you to say, there's another way of doing it, and getting an accountability partner, for instance, within your network to say, this is how we're going to do it. We want to play the long game. How important is that?
Yeah, and it's super important. None of us can do this by ourselves. It's why things like mentorship are also so important. So having people who you can almost plan and map what you're trying to achieve with, who can then, as you say, hold you accountable to those things is really hard. But as I say all these things, I'm certainly not suggesting that you can't have some level of fun or immediate gratification. It's about not only doing that, right? So again, it's about being specific. It's about saying, well, I know in the little I make, X percentage I want to keep for a future thing. And I'm going to do that first. And whatever's left over, I'm going to enjoy. So I'm certainly not saying don't enjoy yourself, right? Have a good time. You can't sort of keep pouring from an empty cup. So you have to do that.
So you can go out, you can grab a coffee.
You can do a lot more than grab a coffee. But I'm saying be clear in doing it that you're not doing it at the expense of, right? Which is why intentionality is so important. Like apply your mind to the things that are important to you. And then you can say, cool, well, I know I'm working towards this thing and that's what that requires. But for me to continually be on this race, there's some short-term things that I need to do. I'm going to take that holiday. I'm going to splurge on those kicks, or I'm going to buy whatever it is, right? Like wherever you are. So My caution is really just that it's not either or, and a wealth mindset does require intentionality and balance.
How do you roll with the punches as you build this wealth mindset? Because failure happens, right?
Yeah.
Things go wrong.
Yeah.
How do you make sure that you can recalibrate and start over and make sure that you stay the path?
Yeah. What I want to say to that is I think we also have to be careful around some of the catchphrases that get thrown around. Like I've heard people, and maybe it works for some, it's just not for me. I've heard people say stuff like, there's no failure, only lessons, there's no losses, only lessons. And like, no, sometimes you fail and it sucks and it hurts and, it doesn't feel great. Yeah, you have to face it. You can't always use like a meme to get out of it. Like this is real life. For me, what's really worked well there is, again, having those, I reckon, my 4 or 5 closest people around me who are people that can show up for you when you need it the most, who are people who can remind you of the bigger picture, who are people who can sort of help you process the thing that you've experienced. I think that failure does happen. I think disappointments do happen. And I think that really important lessons come from that. And the pain of failure often is where the greatest lessons come from. And again, if you think about having a long-term view on things, what you realize if you were to draw the graph, like life has these peaks and troughs all the time.
Yeah.
But if the trend line is predominantly going up, you're on the right track, right? I think sometimes what we do is we view our lives in the small microcosm of today's failure, not in the context of what's the last 12 months been? What's the last 5 years been? I've seen it, and I've seen it through my life with things that I've tried. I mean, I've tried many, and you referenced me saying I'm an accidental banker because I've tried a few different career paths, many of which didn't work out. What I've realized in my role today is a lot of the lessons I learned in those things that didn't work out have set me up really well for the things that I'm doing now. But it's also, I guess, the understanding that failing at something or doing badly at something doesn't make you a failure, doesn't make you a bad person, right? Like I can get a task wrong. I can fail at a task. Doesn't make me the individual a failure. There's still intrinsic value in me as a person.
So it's a bad day, not a bad life.
You know what I'm saying?
Yeah. We also didn't shy away from the difficult conversations either. In a 2-part conversation with Lise Marie Brink and Jörg van Niekerk from the Investec tax and fiduciary team, we discussed the key aspects of estate planning and drafting a will in South Africa. They covered what should be included in a will, how to get started, and the importance of updating it after major life changes. What does life look like when you don't have a will?
That's a very important question, and something, unfortunately, if we look at the stats in South Africa, happens far too often. I think it's important to kick off here to bust 2 very common myths that exist. The one being that if I do not have a will, my assets go to the state. This is not true. And if I pass away, my assets will automatically devolve on my partner, my life partner, or my spouse, which isn't necessarily true. When I pass away without a will or without a validly executed will, the laws of interstate succession, it's legislation that will effectively dictate what happens to my estate when I pass away. And I'm going to highlight here an unintended consequence for Thabo, who's not married, he has no children. He might have a very good relationship with his cousins. He might have a very close affiliation with some charitable organizations. Thabo passes away without a valid will in place. So the laws of interstate succession will always draft I would say almost like a family tree to find the closest blood relative to Thabo. So in the absence of a spouse and children, they will go to the parents. In the absence of parents, they will go to his siblings. And the courts will effectively draw that family tree as wide as they possibly can until they find the closest blood relative to Thabo.
And what are the essential elements to include in a will to ensure that it is legal in South Africa?
So firstly, a person must be over the age of 16 before they can draft and prepare a will. When preparing the will, I think it goes without saying, they should be of sound mind, not be under any influence or coerced into preparing the will. Secondly, the will must be in writing. And this means that the will can be either typed or handwritten. The will needs to be signed by the person whose will it is on each page in the presence of 2 competent witnesses. And these 2 competent witnesses needs to sign and attest to the will in the presence of the individual preparing the will. This is something we far too often come across in the industry where wills are dropped off and it was signed by the testator or the testatrix at home, and with a little sticky note, on the front page saying, "Will you please witness the will that I've dropped off?" And that could invalidate the will, because the witnesses now are neither in a position, if they were ever to be called, into a court of law, they can't attest that the testator or the testatrix at the time of signing the will understood what he was preparing, understood the legal consequences of the will. He was under no influence or coerced into doing so, because they weren't there when the will was signed.
Another crucial conversation we had this year was on retirement, because it's never too late or too early to start thinking about your retirement. In an episode on the latest trend of unretirement, where people return to work after retiring or where they delay retirement past the age of 65, Kate Robson, the co-head of Investec My Investments, and Nicolette Mashile, award-winning financial literacy author, also known as the Financial Bunny, discuss what's driving the shift, the impact of poor saving habits, and why early retirement planning is essential. Do you still need to keep those good habits of having a financial advisor and still saving for retirement even at that age?
Yes, definitely. So I think we all think that once we reach the age of 65, that somehow the tax man goes away. But from an income point of view, obviously when you re-enter the workforce in whatever shape or form, whether it be consulting, a board seat, a 9 to 5, you obviously are going to be taxed again. I think really importantly at this stage, again, it's a really good time to re-engage your financial advisor. Nicolette spoke earlier around going to the doctor, getting a script. This is potentially your update from a health check perspective around, this is what I'm earning. As you're earning, you're hopefully going to be putting more away from a retirement point of view.
I think a financial advisor is probably going to be even more important in retirement, because we don't have that date. When we are pre-retirement, we have the date. We have like when I reach 65. Now you don't. Now it's like, I'm not really sure when death is going to come knocking. So I could live 30 years after retiring. If I could live 5, you don't know. So you always have to guard against any type of uncertainty.
You've both spoken about tax when it comes to the lump sum, the payout, but why am I still being taxed? And does that tax actually come in? What threshold are you at? I mean, when you have that sort of experience, you probably earning quite a bit.
Obviously, at that age, depending on what you're doing, you're more than likely being taxed at a pay-as-you-earn level. So very similar to what you would be taxed at when you're working from a full-time point of view. When you retire, at the date of retirement, there's obviously certain product rules around retirement savings, being able to move retirement savings into living annuities and other products. There's often some tax efficiency that comes with that. So even though you're being taxed on your earnings, you may be able to create some level of tax efficiency through sitting down with a financial advisor and understanding, do you pay off your bond, for example, with that lump sum? Do you start a business? Typically, when you sit down with a financial advisor, you look at time horizon, risk appetite, etc. And when you don't know what that time horizon is, your planning conversation from a financial planning point of view also potentially changes to that of estate planning. So what happens to leaving a legacy behind, beneficiaries, tax from an estate perspective? Do you have enough life cover in place? So there are a number of different pieces to that conversation. So every time you meet with your financial advisor, we often talk about life stage change. And anytime something in your life changes, there's always a really good sort of trigger point for you to have that conversation or to go for your health check.
And I think from a tax perspective, you probably need also, over and above your financial advisor, is somebody who's going to help you look at your tax affairs. Traditionally, when you are in employment, a lot of stuff actually gets done for you. But when you are in retirement, you're now all of a sudden on your own. So things like, for instance, medical tax credits, you almost have to understand what they are for you to be able to benefit from that rebate. There's interest exemption from your interest income, capital gains tax, don't sell everything in 1 year. So I think it's really, really important to understand that on one side, it's the tax efficiency that you need to find, but the other side is also understanding what type of rebates, exclusions, exemptions you can get so that you try and bring that tax liability as low as possible.
No one ever imagines that they'll outlive their retirement funds, right? But that is a big reality. You live 20, 30 years after retirement. What does a investment look like at that particular point, making sure that you're still putting away a bit of money that could benefit you years into retirement?
The core principles of money management, or what we refer to as your investment journey, doesn't typically change once you are post-retirement. So making sure that you've got emergency savings while you're earning income, and once you stop and maybe restart earning income, is to continue to put money away.
The conversations we explored weren't just about the personal. As cybercrime continues to rapidly advance, placing business at risk, we spoke to Professor Denny Myberg, digital forensics expert, and Kevin Hogan, the head of fraud risk at Investec, to uncover the latest scams like business email compromise, ransomware, and fake payment notifications. It's a conversation that highlighted how small business owners and large organizations really have to strengthen their human firewall and stay one step ahead of evolving fraud tactics. I think let's start with the bigger picture, Danny. What are the most common cyber threats are facing businesses today?
We are seeing that globally, the largest cybercrime is currently referred to as a business email compromise, or BEC. That, in essence, is where a threat actor is able to compromise your email account, normally not on your computer, but your web mail account. They obtain your password through phishing or social engineering, where they contact you and get you to divulge that detail, and then followed by them logging into your mail, working through your mail, seeing what financial transactions you might be involved in. They are then able to insert them in that communication and instruct the paying part of that communication in terms of transferring the money into a new account. So we are estimating about $300 million per month that is lost globally because of this crime.
Kevin, from a banking perspective, what types of fraud are we seeing from most business clients?
BEC is the big business fraud. There's no doubt about it. First time we saw this was in April 2013, and it's just grown and grown and grown. I mean, I've even seen this fraud done in a little bicycle shop. And then obviously it's been done at huge conglomerates. So you go from the big millions and millions and millions being lost right down to a couple of $1,000. The problem is that clients assume that this is a technology-related crime where the banks are protecting you using fancy, space-age technology, and it's not. This is a human crime. Because as Danny reiterated, social engineering is where I trick you into giving away your login credentials. I use phishing as an example to do that. We can also do social engineering. So what does that look like? You can get a phone call from someone pretending to be from your bank or from another organization, and you inadvertently give away your username and password. Or you make the common mistake that a lot of people make. They use the same password on multiple accounts. So let's use a good example. Gmail is a really good product. It's probably the best email on the planet. They've got wonderful security. However, if you are using that Gmail username and password on all your accounts, you're going to end up putting that email password somewhere that's not secure. That place is going to get hacked and your password is going to be in the open. And then they're going to use your Gmail account to open everything, because unfortunately, Gmail use something called single sign-on, where they allow you to use that username and password to log into multiple things. So it's about people being taken advantage of, and they don't even know that that's happening.
So we're just not paying attention when we're sending those emails. We're too trusting sometimes, and that's how you get caught out.
The reason why it's so successful is because the perpetrators now got full access to your recognized email account, and they can send that instruction to your financial advisor from your real mail account. They've got the reference to how do you sound electronically, how do you compile your emails, etc. And with the aid of ChatGPT, I can now imitate you 100%. And the unfortunate part for the financial institution is they can't differentiate that it's not their client speaking with them.
I mean, even to Danny's point, we've seen fraudsters do these types of emails or interceptions in Afrikaans. And they cannot speak Afrikaans. Why? Because they're using things like Google Translate and ChatGPT. Wow. And so this might end up at an individual whose first language is Afrikaans, and they've been liaising with whoever in Afrikaans. Now they get a response in Afrikaans. Their brain psychologically is telling them the thing's completely real.
Wow, it's getting more sophisticated. Danny, then talking about ransomware and some of the other modern form of attacks, what should people look out for and what does it look like?
So ransomware and data exfiltrations are definitely the two types of attacks that we're seeing getting the most coverage by the media because of this Hollywood concept of hackers and, the dark fear that we've got for somebody breaking into our environments. The problem that we're seeing is that ransomware is being executed, and the ransomware that they utilize is a Department of Defense standard. So you can't decrypt it unless an organization's got healthy, air-gapped backups. They will fall victim of it. What we've seen is that on average in South Africa, and these are statistics we compiled ourselves since 2020 when working on 40 to 60 major breaches per year, we are seeing that the hackers are in an environment on average 117 days. So in that 117 days, they are able to infect your backups. They alter the security settings of the environment. They would exclude the C drive from being scanned by your antivirus, for example. They utilize recognized applications on your environment like remote desktop to be able to. So it's not just malware that they bring in. They're using legitimate tools to get to that point. When they execute it at that stage, after 117 days, they know that one, the backup's already ruined.
So they would let you run the business normally?
Nobody detects them.
Until they're ready to strike.
So at the point when they execute ransomware, by that time, you have to check, did they exfiltrate data? Did they steal data? So you have to be so careful when they were in the environment. You have to audit that environment, make sure that you can determine what exactly they did.
But we also did a deep dive on one of the most important topics affecting many, many South Africans, going solar in a country still working towards energy stability. Devet Taljaard, who is the technical advisor at Investec Sustainable Solutions, Kirk Palmer, director at Solarify, and Andrew Winston, the CEO at Energy LED, joined me to tackle solar power and energy efficiency for households. Together, they broke down the current state of the energy crisis in South Africa, the realities of Eskom, and the future of electricity. They shared actionable tips on how to reduce your energy bill, and they explained the different types of solar systems, the cost of solar panels, and how to choose a solar system for your home. Choosing the right solar system can feel quite overwhelming because there's all this terminology and you feel like you need to be almost tech savvy and know your business as soon as you walk into a supplier. Just some of the research that's needed to make sure you make the right decision.
As Kirk mentioned, there's the main components that we know about, the batteries, inverters and panels, and they also cost the most. So it's really important to get the highest quality components out of those three. And the questions to ask really is around the local support for that product in terms of warranty, repairs, and the like. And then there are some tiering structures that you can use. On the panels, it's tier 1 rated, which is a Bloomberg New Energy Fund bankability rating. But basically what it means is that this panel is supported and it will likely be supported for the next 10 to 15 years over the warranty period. In terms of inverters, same sort of rating applies, but there are local regulations that need to be met. So if you hear the term NRS type tested, that's a national specification, but there's a cheat sheet that you can use that's called the City of Cape Town approved inverter list. Those inverters are all NRS type tested. Majority of them meet international specifications as well. So if you go with an inverter on that list, you should be in the right ballpark. And then the last one is, does the inverter have a user-friendly app or an online portal that you can manage your energy consumption? You can have a view, and you can also see how much energy you're using during different times of the day. And you'll be surprised to see that there's swimming pool pumps kicking on at 3 o'clock in the morning that can be maybe switched to timers. So just having that sort of overarching view of your energy consumption really changes the way you interact with energy in your house or in your business.
Then, David, looking at, the compliance and safety considerations when, getting a solar system, it's not about just picking up the phone and picking randomly who's going to be installing it, but there are regulations to this. Can you just share some of those so that people don't go in without that information?
Yeah, I think this is really important for homeowners and business owners to understand and to get to grips with. There's a lot of information currently floating around solar PV registrations from Eskom, from municipalities, and there's frankly a lot of fear mongering going around. So the idea is to break it down in what is required, what is an option, and breaking that down for the listeners. First of all, what's important to understand that a solar PV installation is an electrical installation. So all of the electrical installation regulations that pertain to other electrical installations also apply to solar PV. So what's really important is that your installer that you select has to be a registered electrical contractor. That's the first thing. And that electrical contractor will then, at the end of the installation, issue you with a certificate of compliance for that system. That is really important, and without those two first boxes being ticked, can't go further. So make sure that your selected installer has the necessary registrations and will issue you with that certificate of compliance. Secondly, there are the municipal requirements or the Eskom direct connected customer requirements around small scale embedded generation. So that's SSEG, the term that we hear in the news quite often. And what's important to understand there is that as a homeowner or a business owner, when you've got a solar PV system that's connected to the grid, you unfortunately still have to meet the requirements of that grid operator. It's the same as when you drive your own privately owned vehicle on the road. It still has to be roadworthy, and you have to be able to prove that roadworthiness. So municipalities have got different requirements. Some municipalities are a lot more organized in terms of their SSEG processes with online registrations and the like. But a installer or an installation company that's worth their salt should be able to help you with that process. And that's one of the questions you can ask. What's your track record? How many SSEG approvals have you done in the city of Cape Town or the city of...
And they'll know you know what you're talking about.
Absolutely. If they don't, then try the next one on the list. And I think the last one to note, and just to make this easy to understand for the listeners, is that ultimately that registration is the responsibility of the homeowner or the business owner. And the reason for that is that you've got a supply agreement between yourself and the city, or yourself and Eskom. It's not the installer. They don't have that contract. So if you are installing equipment that has the potential to change the grid conditions or have an impact on the grid, it's your responsibility, because you've got the electricity bill and the supply agreement at the end of the day. And then finally, insurance companies are starting to come down a lot harder on having all of these regulatory requirements in place. And ultimately, if you want to take advantage of any sort of financial incentives about feeding energy back into the grid, getting paid for that, like the City of Cape Town's Cash for Power program, you have to meet all of these requirements and you have to have the system registered.
That's it for this special 2025 Year in Review edition of Everything Counts. If you've listened this year, taken a step, shifted a habit, or asked some tough questions about your own money habits, then well done. If you're feeling ready for more change, more clarity, and more control, the work doesn't stop here. If you've enjoyed listening to any of our episodes, please share with those who could benefit from these vital conversations. You can also subscribe to Investec's Focus Radio on any of your favorite podcast platforms and catch our latest episodes. In the meantime, here's to a purpose-driven new year. Stay curious, stay intentional, and remember, when it comes to building your wealth, everything counts.
The views expressed are those of the contributors at the time of publication and do not necessarily represent the views of the firm and should not be taken as advice or recommendations. Investec Private Banking, a division of Investec Bank Limited, a registered credit provider committed to the Code of Banking Practice as regulated by the National Financial Ombudsman.